Hi friends, market started correcting in September 2024 and as of 12th of March, Nifty 50 is down by almost 15% from its peak. If you look at the Nifty Mid Cap 150, it is down by almost 20% as of 12th of March 2025. And if you look at the Nifty Small Cap 250 Index, this is down by almost 25%. However, Parag Parikh Flexicap Mutual Fund is down by only 2.7% in the last 6 months. Only 2.7%. So Nifty 50 down by 15%, Mid Cap down by 20%, Small Cap down by 25%, and here is Parag Parikh Flexicap Mutual Fund that is only down by around 3%. So the billion-dollar question is that how is it possible that this Flexicap Mutual Fund has survived this big storm that we all have seen? This video is a must watch because in this video I'm going to cover 3 key things. Number 1 is the complete portfolio analysis of Parag Parikh Flexicap Mutual Fund that will teach us how to build stock market crash-proof portfolios in future. Point number 2 is which stocks exactly they have been buying consistently even though the market has been falling, which stocks have they been selling consistently when the market is falling, and which stocks have they newly added in their portfolio. And the third key point I will cover is I will give you detailed commentary on 3 stocks that I'll pick from their portfolio. Every word I'll speak will be data backed. Let the data talk. With that, let's get this video cracking. First point, the complete analysis of their portfolio. Have a look at my screen. You will see that as of February 2025, they have around 27 Indian stocks in their portfolio, which contributes to around 65% of their portfolio. Don't worry about the names of these stocks. In fact, I will show you the last 5 months of trend in these 27 stocks in terms of which ones they have been buying and selling. But let me first cover the portfolio analysis. So 65% is invested in Indian stocks. 27 Indian stocks is what they have in their portfolio. Now, if I move on to their next item, you will see here is that they've got almost 13%, 12.90% of exposure to the US stocks. And look at this, they have got only 4 stocks from a US market perspective: Alphabet, Meta, Microsoft, and Amazon. Very, very simple US stock market portfolio is what they have. Nothing fancy, and that's the key that we need to take away from here. Moving on, they have certificate of deposits, which are the corporate debts. And if you look at the total allocation to corporate debt, you will see that it is somewhere around 10%, 9.5% is the certificate of deposit investment. And lastly, they have, if I talk about the last component here, they have around 11.28% is the traps, which is the overnight debt. So all in all, if we see their portfolio summary, in fact, I wrote a detailed post about their portfolio analysis just few days back on my YouTube community member, and I broke it down in terms of 65% in Indian stocks, 13% in US stocks, almost 21% in debt, 10% in certificate of deposits, 11% in traps, 21% in debt, and remaining 1% here and there. Point is very, very simple. What they have managed to do is they have got very, very basic point right, which is the diversification. They have not heavily relied on Indian stock market or US stock market or equity. In fact, they've got 21% of debt component in there. And in spite of this, if you look at the longer term return of Flexicap Mutual Fund category, Parag Parikh you will find in the top 3 mutual funds over a longer period of time. So it doesn't mean that debt has dragged down their returns. In fact, in the last 5 years, rolling return tells us that they have done pretty well. With that, let's move to point number 2. In point 2, we are going to cover which stocks exactly Parag Parikh Flexicap Mutual Fund is continuously buying even though the market is falling. Also, which stocks are they selling? Which stocks they have newly added in this market correction? Extremely important analysis I will share with you. But please make sure you do not blindly go and invest in any of these stocks. You must do your own research before you invest in stocks. But if you struggle to understand the fundamentals of stock research, then I would highly recommend you to invest in some good books. One good book that I personally recommend is this book here, Stock Investing Mastermind by Zebra Learn. Zebra Learn is a wonderful platform for book readers. It was founded by Anurag Sundarka and Radhika Sundarka, and you may already know them because they recently appeared on Shark Tank and they got a funding of around 1 crore from Ritesh Agarwal. Coming back to this book here, I had earlier spoken about this book and some of you who read this book had given very, very positive feedback. This book is designed to guide you step by step through the process of investing in stocks. What all it covers, let me highlight few key areas. Number 1 is how to read financial reports like a pro. From balance sheets to income statements to cash flow statements, you will get a clear-cut understanding of how to gauge a company's financial health. Plus, it breaks down the annual report so that you know exactly which sections are you looking for. Secondly, you will also learn how to evaluate industry, analyzing aspects like competition, market size, Porter's forces. Thirdly, this book also deep dives into how the stock market moves and how you can manage emotions and market sentiments effectively. It teaches you how to buy and sell stocks at right time and at the right price. And my personal favorite from this book is its 101 point investing checklist, which is a detailed step-by-step guide for analyzing stocks. Whether you're a beginner or have some experience, this book is perfect for someone who is willing to sharpen their investing skills for Indian stock market. So don't wait, check out the link in the description and start your stock investing journey in the right way using this book. It's value for money and packed with knowledge that you will carry with you for a lifetime. If you use my code, you will get a 15% discount. With this, let's move to point number 2, which is the stocks that they have been buying, they have been selling and accumulating on dips. Have a look at my screen and you will see 27 stocks on the left here, okay? And then you will see how since October they have been changing the quantity of the stocks, right? Also in column D here, we see the percentage of a stock's exposure in their overall portfolio. So let me start with HDFC Bank Limited here. 8.43% is the exposure in their portfolio, biggest holding in their portfolio. And more importantly, if you see since October, they have been buying this stock, especially in the month of January and February. They have upped the game by around 7.88%. So seems like they have been treating HDFC as a buy on dip sort of a strategy. Now, if I move to next one, Bajaj Holding and Investment Limited, it has remained constant here, no changes here. Third one is Coal India Limited. Very, very interesting here. And you will see that they have increased their holdings by around 21% and they have done huge buying in the month of January and February. Again, I'll speak about Coal India Limited in details towards the later part of this video. Interesting concept that you need to understand there. But now coming to Power Grid Corporation of India, some buying around 7%, not a huge buying here. ICICI Bank Limited, they've done small buying, 3.84% up. ITC Limited, they've done smaller buying, 7.06%. But then comes the Kotak Mahindra Bank Limited. They've done a huge buying in November, December, and as well as in January. So big stakes in Kotak Mahindra Bank now. Maruti Suzuki here is constant. HCL Technologies constant here. Axis Bank, another bank, private bank, the stakes have gone up by around 9.71%. If I take a pause here, what you will note here is that they've been very overweight on private banks. HDFC Bank, Kotak Mahindra, Axis Bank, ICICI Bank, these are the banks that they have in portfolio. They have kept away from PSU banks, and within the private banks, they're sticking to the 4 largest private banks. That is what they are going after. Now moving on, if you see Mahindra and Mahindra Limited, they have newly added. It was not there in November and October. If you see, they have newly added, and in fact, they have been buying this continuously December to January to February. If you see, the quantities have gone up, almost doubled from what they had in December. Now, if you look at Infosys Limited, constant, no movement here. Dr. Reddy's Laboratory. Now comes the pharma sector here. Interesting one to note here. Although only 1.26% is the overall holding, but if you see the massive movement, 60% up, and they have mainly bought it in Jan and February. Huge buying here in Dr. Reddy's Laboratory. Balakrishna India Limited have remained constant. Cipla Limited, another one that I will cover in this video if the time permits here. If you see 85%, huge buying here, and if you see it is gone up consistently in the month of December, January and February. Next one is Zydus Life Science Limited. It is gone up by almost 49%. Huge buying that has happened in the month of February is what you can see clearly here. Now comes the wealth management sector here. For example, Motilal Oswal India Limited, huge selling, 35% stakes down here. If you look at Indian Energy Exchange Limited, it has remained constant. But if you look at Multi-Commodity Exchange of India Limited, huge selling, dropped by almost 36%. If I continue to cover the wealth management, CDSL here dropped by almost 57%. Huge selling overall in the wealth management sector is what we are seeing here. Coming back to hospital sector, Narayan Rudale has been added recently in the month of December. They have done more buying in the month of January, and now in February they seem to be in constant mode. Ipca Laboratory Limited, huge selling, 45% stakes have been diluted. CDSL I talked about. EID Parry India Limited, some buying around 15%. ITC Hotels, again this is because of the demerger that happened, we all are aware of that. ICRA Limited, huge selling again, 25%. And finally Maharashtra Scooter Limited and Swaraj Engine have remained constant. Overall, if you see the theme here, private banks, top 4 banks, they have done the buying. If you look at the pharma sector, they have done the huge buying. If you look at the wealth management sector, they have got rid of the stocks hugely. Hopefully this gives you the picture in terms of which stocks they have bought and sold and accumulated during this market crash. Let me now speak about 3 stocks in this video and bring you some latest insights on those stocks. So far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me a lot to bring such content for you at zero cost. Also, I posted some of this analysis on my YouTube community few days back. So if you want to receive timely updates and insights, you can consider joining my YouTube community. The feedback of this community has been very, very good. Simply go to my channel, click on join button, or you will find the link in the description or in the pinned comments. With that, let me give you my latest notes and commentary on 3 stocks. Number 1 that I'm going to pick up is Cipla Limited, mainly because I see the huge buying. 85% of the stakes have gone up in this portfolio. So let me speak about Cipla Limited for a minute. So Cipla as a company has been around for almost 90 years. But more importantly, if I talk about the data points here, you will note that in the last 5 years, revenues have only grown by 10%. So not a huge growth per se. But if you look at the profitability metrics, for example, EBITDA and PAT margin, in the last 5 to 7 years, they have been consistently going up. Also, if you note, the company used to have around 4,000 crores of debt in FY18. It's now come down drastically to 466 crore by FY25. Also, if you look at the cash reserves of this company, it has gone up hugely from 1400 crore back in FY18 to almost 9400 crore in FY25. And the reason I'm sharing this data with you is that a lot of large cap and mid cap stocks balance sheets are looking much better now because the debt has come down. Cash reserves are looking better. Overall, Indian stock market, the quality of the stocks have now become better. And that is why I'm very bullish on Indian stock market for the next 5 to 10 years. Of course, there is a fall right now, but it is not going to last for a long time. And I remain bullish on Indian stock market for the next 5 to 10 years. Now, coming back to Cipla, if you see the Q3 results of this company, they are sitting at all-time high revenues of 7,073 crores as per Screener and all-time high profitability. So they have done pretty well from an earnings perspective. But now comes the billion-dollar question. Rahul, are we not worried about the tariffs on pharma, because we export a lot of pharma products to the US? So for this, let me give you some insights. For example, almost 30% of the revenues that Cipla gets comes from North America, and this is the exposure they have. However, I was reading their earnings call, and what their management said that they can't really specifically comment on what the impact of the tariffs are likely to be, because we don't really know what the tariffs will be on India yet. However, they made a very important point that in the last 3 years, they have been setting up facilities in the US, and there will come a point where they will decide whether they want to ship from India, that will have freight cost plus the duties if there are any, versus if they were to supply directly from the US facilities. So to some extent, there is some de-risking the company has done in the last 3 years. But again, we don't know what is likely to happen in the future in terms of the tariffs. So that does remain a risk on this particular company. With that, let's move to stock number 2, which is CDSL. Now, if you look at Parag Parikh Flexicap Mutual Fund, they have almost sold CDSL to the tune of 57%. And this is not the only wealth management stock that is under huge pressure. If you look at the entire sector, wealth management sector, it is hugely down. In fact, I wrote a detailed note about wealth management sector on my YouTube member community, talking about what is really happening in this particular sector. And now I want to bring some of that discussion live using CDSL as an example here. So have a look at my screen here, and you will see on the top here, black screen, you will see Nifty 50s movement since COVID, and you will see one of the stocks from wealth management sector, and what you will see is that it looks like the movement in the direction is very similar. It is almost replicating the Indian stock market. For example, immediately after COVID, we had a massive bull run. The wealth management stocks were also in bull run. After that, we had hit a bear market for temporary. Again, the wealth management stocks were in the bear territory. Then we had the second bull run that lasted up until September 2024. Wealth management stocks were really bullish. And after that, we started seeing correction in the stock market. Now the wealth management sector is down. What is it telling you? That when the stock market overall is in the bull run, wealth management stocks are doing better. When they are in bearish mode, then the wealth management stocks are also going bearish. Why? Let me now present you some data about the CDSL stock. So have a look at my screen, and you will see Q3 25 earning growth of CDSL has actually come down. The profits have declined from 324 crore to almost 235 crores. Biggest drop in the income you will see in the purple color, which is the transaction charges. And if you see, up until Q2 FY25, it was going up, and all of a sudden in Q3, it has come down from 83 crores to almost 59 crores. And this is mainly happening because the number of new demat accounts that are being opened in the month of January and February are now coming down. In fact, in the month of February, it has come down to 21-month low. And if I give you the data, you will note that in the month of February, we had new additions of 2.26 million demat account versus 4.55 million demat accounts that were opened in the month of July 2024. Not only the new demat account additions have come down, but also existing demat account holders are transacting less in stock market. Therefore, the transaction charges that the revenues that these companies earn are also coming down, and hence of course the stock market will react to the earnings growth. The stock prices are coming down in majority of the wealth management stocks. But the overall long-term picture of these stocks in my view is very good, because if you look at the penetration of the demat accounts, it is only 12% compared to what we have in US is 62%. Now I'm not saying that in India the 12% penetration is going to go up immediately to 62%, but let's say that in the next 5 years, if this 12% goes up to 24%, these stocks are going to do better. It's a short-term correction that we are seeing right now in these stocks. Hopefully in the longer term or mid-term, these stocks might start to have some earnings back, but it really depends on when the sentiments will get lifted. When will the retail users start to come back to stock market and start to make some more transactions? And that is what we need to wait for these stocks. In my view, the bottom is not yet there in the wealth management sector. There may be more pain in the shorter term because the Q4 earning results are likely to be down. Again, let's wait and watch what happens in the Q4 earnings, and then accordingly we get to understand what is really happening in this domain. With that, let's move to stock number 3, and I definitely want to cover Coal India Limited. They have done some buying. The stakes are up by almost 21%, and this already has around 6% of the portfolio weightage. I shared detailed insights about Coal India Limited on my YouTube community very recently, so I'm going to run you through that commentary very quickly. The key question you may have in your mind is, when everybody's talking about renewable energy, what is the future of Coal India, right? So please be aware that around 55% of India's energy need is fulfilled by coal. There is still a heavy reliance on thermal power, and also it is projected that by 2030 the coal demand will continue to grow, because both thermal power and renewable sources are going to grow in parallel. It's not that thermal power is going to die down. At least there are next 5 to 8 years where people see visibility in this particular space. Now the second critical point here is that, can this company grow by, let's say, 25% CAGR, 20% CAGR, 15% CAGR? Highly unlikely, because from a volume perspective there may not be huge growth coming. But what really makes this company interesting is that they've got a strong cash balance. About 30,000 crore is the balance, right? If you go and have a look at the latest data. Also very high ROC, consistently 50% plus ROC is what this company has delivered, and more importantly they have very high dividend yield, so around 6.5 to 7%. Let me now share some data around dividend here. What you see on my screen is calendar year wise breakdown of their dividends, how much they have given in one particular year, and you will see that on an average in the last 4 years they have given around 22 rupees per share as the dividend. Now comes the dividend yield concept, that if investor A buys this particular stock hypothetically at 300 rupees level, then their dividend return will be almost 7.33%, and on top, if the stock price appreciates, that's of course a cherry on the top. While investor B buys this stock at, let's say, 500 rupees per share, their dividend yield is going to be only 4.4%, right? So the price at which you buy such stocks really matters a lot, and hence you need to understand the concept of dividend yield. Again, I'm not saying that you go and invest in any of these stocks, but this portfolio analysis and these moves will help you understand what these experts are doing in the market, and you might take some learnings out of it. But please make sure you do your own research before you invest in any of these stocks. And if you want to learn stock investing in a step-by-step manner, then you can start with this book, Stock Investing Mastermind from Zebralearn. The link is in the description. You're going to get 15% discount if you use my code. With that, I hope to see you in my next video. Until then, keep rocking.